distinguished panelists, Jonathan Dixon, Balz Grollimund, and Leigh Wolfrom, to join me on stage. Good afternoon to everyone. It's a great pleasure for me to moderate this session on this important risk, cyber. I have with me Jonathan Dixon, Secretary General of the IAIS. Good afternoon, Jonathan. Leigh Wolfrom, Policy Analyst in the Insurance Unit of the OECD. Good afternoon, Leigh. And Balz Grollimund, who is in charge of P&C Risk Management at Swiss Re. Good afternoon, Balz. Cyber risk is a paradox. On one hand, it ranks in the usual top 3 concerns of risk professionals, risk managers, risk executives. And on the other hand, the cyber insurance market is only less than 1% of total P&C premiums. You would have expected that if the concern is very high, the cyber insurance market size would be higher. And there is no sign of a let-up in hostilities. Total cyber attacks increased by 38% in 2022. Some sectors are particularly targeted. The difficult health sector is one of them. And we have all heard these terrible stories of hospitals being totally paralyzed because of a cyber attack and having to reschedule surgery operations that were scheduled. The ongoing conflict between Russia and Ukraine has had an important impact, with both countries deploying their full arsenal of offensive cyber capabilities. Hostile cyber activity is intensifying, in particular in terms of wiperfare. So for for those of you who are not familiar with the terminology of cyber, wiperfare are attacks. There's a bee that really is insisting on being read around here. It's a test. It's a resilience test. Wiperfare, contrary to ransomware, the objectives of wiperfare is purely destructive. Ransomware, the objective is financial. Wiperfare, it's purely destructive. The reality is, until 2022, wiperfare attacks, purely destructive, were rather rare. But with the war, we have seen an increase in wiperfare activity, a substantial increase, with a notable pickup in attacks by pro-Russian hacktivists and criminal organizations. Between the third quarter and the fourth quarter of 2022 alone, wiperfare attacks have increased by more than 50%. And ransomware, the objective of which is financial, is also on the rise again. Interestingly, in the first half of 2022, we saw a decreasing frequency of ransomware, probably linked to the fact that the perpetrators were being repositioned on the Russian-Ukraine war. But today, ransomware attacks have surged again, with an increase of 30% in the first quarter of 2023. So this is the gloomy picture in which we are, and we are going to look at what this means for the insurance industry. But let me start by turning to you, Balz. Is there anything important I've missed in the description of what is going on in terms of cyber activity?
Yeah, I think there's one important aspect which I found quite surprising when I learned about this as well, and that's cybercrime as a service, which seems to be a very common, I guess we can call it, business model. So it's a group that provides services on how to attack ransomware attacks, and that makes it very easy to do those attacks, and that explains some of these increases that we've seen. And just as an evidence of that, there was an attack last year on Toronto Sick Kids, so the big kids hospital, very well publicized. It was a ransomware attack. They were trying to, extort money, and the group behind the service that actually sold the service to these attackers, they provided the code to the hospital because they realized this was bad publicity for them at the end of the day. And it just shows it's a big business, and this group specifically supposedly has somewhere around 100 million in ransomware money that was associated with their service. So I think it's important to see that dynamic. Yeah.
Thank you, Balz, for highlighting indeed this growing role of SaaS, cyber as a service. Let me turn to Leigh. Leigh, the OECD has done quite a bit of work on cyber insurance markets over the past 5 years. Which trends do you see in the current evolution of the cyber insurance market?
Sure, thanks, Jad. So I think it was said earlier that regulators, and we're not really a regulator, but we're sort of an analytical think tank, are usually behind the industry. And so we started working on this market about 5 years ago, which of course is much later than the industry started offering this product. But the challenges that we found back then were I think well known and still exist today. They were around things around quantification of cyber risk, awareness of cyber risk among policyholders or potential policyholders, a lack of clarity in terms of the coverage provided both in the sort of the standalone market and also in traditional lines of business or lack of coverage. Some concerns about accumulation risk, and these all exist today. But I think there's actually been quite a bit of improvement across all of those areas. And I know Balz will talk a little bit about some of those in his remarks. I think what Jad was saying at the beginning about the increase in frequency of cyber attacks has really led to a huge increase in the awareness of the risk among businesses, among potential victims of cyber attacks. And that's obviously led to a significant increase in demand. I think the amount of premiums, one of the more recent figures I've seen, has reached about $14 billion US, which is more than double what it was 5 years ago, if my recollection serves. Part of this is driven by an increase in prices. Increasing attacks means increasing losses. I think the cyber insurance line was actually a very profitable line for insurance companies 5 years ago, and they've gone through a couple of rough years and have had to adjust price accordingly and make some decisions about risk selection. That said, I think there's still a ways to go. There's still, while the market has matured a lot, there's still some signs of immaturity. There is a much lower level of take-up for cyber insurance among commercial entities than there is for other types of commercial insurance. Just as an example, I was in a relatively large emerging market a few weeks ago and was speaking to an international insurer who does lots of cyber insurance business around the world, and I think they had managed to have 5 clients in this country, which one of the largest countries in the world. So it just shows you that there's still a long way to go. And I think there's also still a lot, some signs of maturity both on the supply side in terms of not being able to meet the full needs of especially larger businesses in terms of the amount of capacity, not being able to provide coverage to some of the smaller businesses that might not have the technical expertise to protect themselves and therefore just pose too much of a risk. And there's maybe a much more volatile in many ways pricing cycle in the market, which might also be a sign of some of the immaturity.
Thank you, Leigh, for highlighting these trends. Let me turn to you, Balz. How has the heightened claims experience over the past recent years influenced underwriting guidelines? And there's obviously one very important topic, which is the topic of silent cyber risks, so non-affirmative cyber risks. How are insurers doing? What are insurers doing to address these silent risks? Mm-hmm.
I mean, as an insurance underwriter, what you're trying to do is to understand the risk and then, and to be able to make it insurable. And I can tell you, with a nat cat underwriting background, cyber risk has made me very nervous, right? And I think, honestly, it's probably made a lot of cyber underwriters nervous over the years. Why? Because it's very difficult to grasp, right? We don't know the sources of the risk. When I model a flood, I know what the source is, I know what the extent can be. With cyber, it just gets very concerning. You don't know, right? You don't know how it's going to evolve. So a lot of the focus has, I think Thomas mentioned it earlier, right? As an insurance industry, we're going in a direction where we're trying to make it insurable, to make it understandable, which means limiting exposure, which means creating alignment of interest via co-insurance, which means clarifying terms and conditions, and putting a price, right, to the cyber risk from what we've seen so far, and crucially also to exclude silent cyber. So cyber that is not sold explicitly as a cyber cover, but that sneaks in through a different trajectory. And in that context, I think the EIOPA push for transparency on management of non-affirmative covers is very welcome. On the other hand, the review of the directive of product liability to kind of open the door for cyber defects to impact product liability insurance is another avenue to potentially open the door to silent cyber. I think importantly, and that's the part also that Thomas mentioned earlier, that's the defensive part where we are trying to deal with the risk that, without intervention. And I think very crucially, just like we're helping insureds on NatCat risks to strengthen via risk engineers, right, to strengthen their flood defenses, for instance, or their resilience against other risks. The efforts of our industry to strengthen resilience against cyber risks is absolutely crucial and will help us to provide a better service beyond solely providing the insurance cover once the attack happens, but to prevent the attack from to begin with. Yeah.
Thank you, Balz, for shedding some light on this. Jonathan, of course, one of the very important topics for regulators and supervisors is whether there is some sort of systemicity in the risks that insurers and reinsurers underwrite. The IAIS recently published a special edition of the so-called GMAR, the Global Insurance Market Report, focusing precisely on the topic of cyber. In your view, are cyber risks becoming more systemic? In what ways?
Great. Thanks very much. First of all, very nice to be here and to offer a little bit of a global perspective from insurance supervisors, because obviously this is one very global issue. So we are looking at it, and thanks for referencing the GMAR special report, which we issued in April, so it's on our website if you want to have a look. Just to say that the report was based on data that we collect as part of our annual global monitoring exercise. And that's an exercise where we collect data from around the 60 biggest global insurance groups, as well as sector-wide data directly from insurance supervisors representing over 90% of worldwide premiums. So it is a rich data source. And so we learned some interesting things through that. I mean, to reiterate some of the messages we just heard, again, it pointed to a market that continues to grow significantly off a low base. And it's one that we expect to continue to grow in the coming years. In fact, our data actually indicated the market's already slightly bigger than some of the other estimates. Our report also found that a majority of supervisors, so close to 60%, see an increase in cyber underwriting risks going forward. And the top concerns listed were accumulation risk, obviously, increasing claims frequency for the reasons we've heard, and the rapidly evolving cyber threat landscape. So to the question, are cyber risks systemic? I think on the one hand, we are seeing that the combination of the rapid pace of digital innovation, the expanding cyber threat surface, and geopolitical risks are resulting in increasing interconnectedness within the system, which I think is a force towards greater systemic risk. However, on the other hand, we're also seeing, I think, an encouraging trend, as Leigh referenced, an increasing trend of corporate spending on cyber hygiene issues, more government initiatives on cyber security, which will hopefully help to mitigate some of these increased risks. I think this reflects a growing recognition and awareness amongst corporates of these issues, a greater commitment from government to more proactive approaches on this. So, cut to the bottom line, I think all in all, our GME special topic concluded or did not find evidence that insurers' underwriting activities in the cyber sector pose a significant threat to financial stability currently. So the market for affirmative coverage, for instance, is still relatively small, as we heard, and the industry, I think the assessment is that the industry should be able to absorb quite big losses there. I mean, there is a little bit of a qualification here, of course, which is, as we said, the non-affirmative cyber cover, where the data is very tricky. A lot more work needs to be done. So it wasn't really possible for us to fully assess those exposures and I suppose to have an unqualified conclusion on the systemic nature of the risk. But all in all, I think what it does say is this is a call to be actively monitoring. And I think we want to do that active monitoring at a global level as well, because it is a global issue, but also work closely with the likes of Insurance Europe, JAFIA, and academics in this space to really get a better handle on some of these issues. Thanks.
Thank you, Jonathan. There are two words which I found very, many things, but in particular two words which you mentioned, accumulation and cyber hygiene. And I'd like to come back on those 2 points. Accumulation first. We all live with this fear that one morning we will go down to the ATM, we'll be unable to withdraw money, we'll go to a shop and all the payment system will be paralyzed, and probably we'll go back to barter, exchanging with our neighbor rice against soap. So extreme cyber risks are very difficult to assess, to quantify. Balz, can they be assessed and quantified, these cyber risks? And could more formal, systematic accumulation risk model increase the insurer's risk appetite?
Yeah, I guess it's the big question in the room, right? Is what we're all dealing with cyber, it's the accumulation risk. It's the big event, right? How big can they get? And looking at NatCat again as an analogy where we are very advanced in terms of modeling and understanding tail risk, we have decades, if not centuries, in the case, when you go into scientific evidence to dig through past records with earthquakes, with storms, to level set and to qualify, how severe a storm or an earthquake or any natural catastrophe can be. And I'm sure you know where I'm getting at. With cyber, of course, there's no evidence, right? We have maybe 5, 10, 15 years of and even now with rapidly evolving trends, there's always new vectors of how things could accumulate coming on board. So, and just if that's not gloomy enough, as an illustration, the Colonial Pipeline attack, which happened 2 years ago, I think most of you probably heard about or remember that. One of the big challenges was maybe not so much the shortage from the pipeline interruption itself, but from the response of all the consumers and all the drivers who were fearing fuel shortages and went to fill up the gas tanks, leading to true shortages when it wasn't actually needed just because of the physical interruption. It just shows there's dynamics that come to play which are hard to anticipate. That's the bad news. I guess the good news or kind of the prospective story is that whatever little data we have, or the little experience we have, we absolutely need to make sure we make that available as broadly as we can so we can learn from it. And there is a lot of effort going on in the modeling community to at least try to do what we can, right, with the vectors or the methods of accumulation that we currently do envision to understand that. And that's certainly a good starting point. But it also means that we probably, as insurers or as reinsurers, as last resort in the insurance industry, will remain cautious when it comes to taking on the large stuff, the tail risk for some time. Yeah.
Thank you, Balz. So we've talked about accumulation. I'd like now to turn to the topic of cyber resilience and cyber hygiene, and I'll turn to you, Leigh. Beyond pure risk transfer, in what other ways can insurers help their customers, both before a breach and after a breach?
Sure. So I think we we heard this morning about the importance, we've heard throughout the day really about the importance of insurers playing a large role in supporting risk reduction. And I spend most of my days working with many economists, and a lot of them, the first thing they think about when they think about insurance is moral hazard. And the counter argument to that is always that insurers charge risk-based pricing to encourage risk reduction. There's deductibles, they provide advice, and that's usually true across lots of lines of business, but it's not always true. There's some markets where regulation or competitive factors might get in the way of that service. All that to say, I think if there's one place where, one line of business where insurance really is playing this role, I think it is actually in cyber insurance, because I won't say from the beginning, but at least from my beginning of looking at it, insurers have always been offering these risk assessment tools, network monitoring tools to really help reduce the probability of a loss at their customers. They were giving advice throughout the risk assessment process. They also provided a number of sort of post-impact services in terms of legal advice, public relations, forensic investigation, all of these things to really make it easy for their clients to reduce the impact, which of course benefits the insurers as well, who would have a lower level of claim, but really, reduce the probability of a loss in the first place and reduce the potential impact of a loss in the aftermath. And so I think, as I said, I think it's one of the lines of business where this has been much more implemented than others. I think the one exception that I sort of hate to bring up, but is in the area potentially of coverage for ransoms. And I know anyone who's followed this will know there's some controversy about the insurance company role in providing insurance coverage for ransom payments, because obviously the ransomware market wouldn't operate if nobody was paying ransoms. And I think Jad's introduction gave a good example of where maybe a ransom payment is the best outcome if it helps people get the health services that they need. But I know I have seen some, and you have too, I'm sure, suggestions that being insured and having the capacity of an insurer behind you has sometimes made a business a greater target. And so I do think that's an area where it's not an easy issue, but where potentially the insurance industry has either more to do in terms of managing how they cover ransom payments, or else at least better communicating what they're already doing now, because there is this controversy and concern about that.
Thank you, Leigh. I'm glad you raised this issue. I'm not here to promote the Geneva Association, but I would highlight on this very specific topic that we published last year, in the summer of last year, a report precisely on this topic, whether insurers should or should not reimburse ransom payments, and highlighting the pros and cons of different approaches to this topic. So I'll turn to you, Balz. We here see under France Assurance move society forward confidently. Are insurers truly living up to their force for good moniker in terms of incentivizing good cyber hygiene by corporates, but also SMEs and retail customers?
Yeah, so I would link it actually to the topic that just came up before, right? I truly think that insurance is taking already a very big role in terms of training, in terms of just creating awareness. Actually, there's still it's a diminishing, but number of especially smaller companies who are kind of in denial of cyber risk, right? And with provision of insurance to train, create awareness, also help these organizations to become more resilient. And then also what's often forgotten, if an attack happens, to work through it, right? All the legal, regulatory consequences, just communications, reaching out to affected parties. And it's a very stressful situation for a company to go through, and to have a provider provided by the insurance company. Usually it's not the insurance companies themselves, but having somebody to work through is very helpful. And I would just say, linking to the challenge on ransom payments, and does that increase the problem? Of course, that cannot come in isolation. It has to come with making the potential targets of attack more resilient. And I mentioned the cybercrime as a service initially, and I think the good news about that one is those are not very sophisticated attacks. Those are very standardized attacks that, pretty much if you can go and buy that service, it's not very sophisticated, which means also you can defend against it relatively easily. So if some basic measures are being taken, at least this rapidly increasing frequency of ransomware attacks can actually pretty effectively be mitigated. So a lot of them are, if you go to the base of it, it's still somebody opening a phishing email or social engineering, somebody giving away a password. It's not that sophisticated in many cases either.
Thank you, Balz. You mentioned how stressful the situation is when you're being attacked through a cyber incident. Let me do a quick survey here, and let me ask you, how many of you have been the victim of a cyber attack personally, not your company, retail level? Can you just raise your hand if you have been? Okay, so we have a few of them. I will share my experience, not just to share experience, but because this is the 1-minute education for retail people like us. In December last year, I received an email from my personal email to my personal email, so it was clear that it was sent from inside, saying, "We have your password. This is your password. Please pay 600 euros in bitcoins," which I'm totally unable to do because I don't know how to deal with bitcoins. "Otherwise, we will release your data," whatever that means. And of course, I did not pay the 600 euro bitcoins because I didn't know how to do it. All my emails, 10 years of emails, were erased overnight. And of course, I had no backups. And so I can tell you this was a very stressful situation. But there was one lesson learned, because in the email said, "We got it from a leakage from another website." And I do the things that many of you in this room probably do, which is to have the same password for 10, 12, or 15 websites. And I urge you this evening, when you go back home, to change that, because it can save you a lot of hassle. This was the 30-second education tip on cyber resilience. So we've talked about cyber resilience. I'd like to have the last segment of this panel turn to how to close the protection gap towards a larger, more sustainable cyber insurance market. Susan Neely this morning was referring to the protection gap study of JIFIA, which indicated that cyber is one of the 4 major areas where there is a protection gap. Jonathan, what should be done to reduce the protection gap in cyber?
Well, I would first of all very much agree with what's been said already. So I think the primary way is to focus on cyber hygiene as a way to address the potential loss, and to promote awareness, incentivize change, and a very big role for insurers there. So I very much agree with that as the primary way. Also very good to hear from Balz around the work on data gaps and model maturity. That's going to go a long way to hopefully help address the supply side. But if you're asking a little bit around what we think the role of insurance supervisors is in this, and I would say I don't think it's insurance supervisors' primary role around addressing protection gaps or any silver bullet. But I am very happy to say that now we see strong consensus amongst the global community of insurance supervisors that the issue of addressing protection gaps is part of the role of supervisors, and that supervisors do have a role to play in working together with others to help address protection gaps. So we started doing at the global level some work on that a couple of years ago during the pandemic, when we looked at business interruption protection gaps and some things that could be done in that space. This year we're busy with a project looking at natural catastrophe protection gaps, which I'm glad to say has also got attention at the G7 level, and we're going to be reporting in time for the G7 ministers and central bank governors meeting at the end of the year. We haven't yet done any specific work on cyber risk protection gaps and what supervisors can do around that, but I do think a lot of the thinking is actually transferable between these sort of potentially systemic issues where there are gaps. And this includes, I think first of all, as we've talked about, issues around supporting transparency and getting better data. So I referenced the work that we're doing as part of our global monitoring exercise to hopefully improve data at the global level. on that. I think we need to look at what we can do to support better data sharing, more consistent cyber incident reporting. We're working with the Financial Stability Board on those issues. I think it's also about encouraging supervisors to include cyber risks into their sort of standard stress testing and scenario analysis, as IOPA is doing. So I think this helps raise awareness and better understanding of the risks, which is a first step. I think supervisors should also be open to enabling the leverage of technology to address these issues as well. So openness to insurtechs who possibly have alternate data sources and maybe innovation in modeling that can help to address these issues. But on top of that, I think there's the sort of general issues you would expect. So we need to look at, are there any regulatory barriers to development of this market in a sustainable way? And in fact, I would almost go beyond that and say, actually, supervisors could look at, are there any proactive measures that they could take to support the development of a cyber market in a sustainable way? And then, I say, last but not least, there's the issue of public-private partnerships. Say, last but not least, not in a sense that this would be, for me, the first stop on this issue, because I think, as I said, there is a lot that can be done before you get there. But I do think supervisors can play an important role as sort of advisors, a little bit of a bridge between the insurance industry and policymakers and government around the design of some of these public-private partnerships where necessary. Thanks.
Well, I'm glad you raised this topic of public-private partnership, Jonathan. Leigh, the OECD has worked a lot in different areas on this topic. What scope do you see for enhanced risk sharing through PPPs in cyber risk?
Well, I think there's definitely, a lot of reasons why there could be a clear case for it, and specifically in the area of sort of these systemic accumulation risks, which insurers, as we heard, have done a good job of limiting their exposure to, but it also means that it's uninsured exposure, which will ultimately have to be absorbed by someone and potentially governments. I think the challenge is that, and as we've heard today a lot, is that there are a lot of protection gaps. And governments are facing a lot of areas, and are paying a lot more attention, I think, to areas where there might be a need for some kind of government intervention or backstop to address the risk, whether it be climate. We all know that there was many discussions after the pandemic about COVID business interruption losses. The issue with cyber, I think, is that it's mostly a commercial policyholder protection gap, and there might be a little bit less concern about a commercial loss than, for example, a household loss from a natural catastrophe or a climate risk. And it doesn't mean governments haven't done this before. They did this for terrorism and the aftermath of September 11th. I think one of the big differences relative to that time was that so far, what I can tell, there hasn't been any sort of implication on lending markets for companies that don't have cyber insurance, for example, whereas that was definitely the case in the aftermath of September 11th.
Thank you, Leigh. Maybe one last question before we turn to the audience. Jonathan, you were referring to the topic of information, access to information, data sharing, and of course, for a healthy insurance market to operate, we need data. So, Balz, I'm turning to you. Do you think there is today adequate information sharing between insurers, reinsurers, policyholders, and governments to adequately calibrate and price cyber risks?
I think there's a good level of sharing, but of course always more can be done, right? And with data sharing, I think one thing again we've learned from the NatCat side is it starts with standardization, right? That we provide each other with data that everybody knows what it means and understands and can work off the same basis. And so to that level, there's a good initiative that was just recently started that we also contributed to as part of OASIS with an open data standard for cyber explicitly now. So this should help, at least within the industry, to improve the availability of data. I think when it comes to the more broad sharing, also just of incident data, probably more can be done, right? And it's not an easy road. There's a lot of information that we have to guesstimate, and we don't know what is around. And I think more transparency there would definitely be helpful, especially when we think about also some of those bigger risks that we're concerned about, that we're really concerned about.
Thank you, Balz. We have a couple of minutes to take maybe one question from the audience. Does anyone want to ask a question to any one of the panelists? And I have to say, I was not disciplined. I did not take the iPad with me, so we're opening to the floor. Yes, we have a question here. One question here. A lady, please introduce yourself and ask your question.
Thank you. Thank you very much for this great insights. My name is Nienke Brouwer. I am a lawyer and an academic researcher from the Netherlands. And I was wondering what your view is on all these new cybersecurity legislations coming from the EU, like NIS2, DORA. You already mentioned the revised Product Liability Directive, and what this legislation, which contains security measures but also encourages data sharing, what influence this will be on the cyber insurance markets. Thank you.
Thank you very much for this question. Shall I turn to Balz?
I can give it a first slap, maybe if somebody else wants to build on. Yeah. So I think in terms of DORA, definitely a good development, right? In terms of building cyber resilience, I think that's a theme that keeps coming up. It's, we need to start it at the source before insurance is even necessary. And then with some of the other moves, I've already made a comment on the liability directive, which I think we just have to look at what this means, right, and what that will mean for availability of product in a later stage. Which at this point, or for this specific one, I think it's not going in the right direction. So I see it a bit of a mixed picture, but overall, I think it's the awareness is definitely there, and thinking for solutions and thinking it's always a good thing, right? And then we just need to navigate and figure out to go in a direction that then really works in the end.
Thank you. Does anyone want to add anything?
Maybe I could just, I really don't know the legislation very well, so I might be completely off. But I would suspect that as Balz was saying, I mean, anything that sort of supports the resilience of businesses, that are subject to the legislation, will help with the insurability of the risk and the ability of the insurance sector to provide capacity. As far as I know, I don't think there's anything in any of that legislation that would necessarily directly promote the purchase of cyber insurance. It's more really about the operational resilience and improving the insurability, I think.
Well, we always studiously avoid commenting on any national or regional level legislation, but what I would say is, and what we do hear from discussions with our members and also with the global stakeholders, is recognition that a lot of these regulatory developments are good and in the right direction, but particularly for global groups, there is sometimes the challenge of similar but slightly different requirements in different jurisdictions. So I think this is something we are alert to, and I think having done a fair bit of work now amongst our operational resilience task force on operational resilience issues, including cyber resilience issues, we are talking about next steps, and in particular the potential, the opportunity for seeing around some development of perhaps some global principles on this, which would obviously borrow from some very good work that's been done at the European level, but perhaps if we can help address some potential market fragmentation issues by encouraging some greater standardization across jurisdictions, I think there's some interest in looking at that.
Thank you, Jonathan. I think we're coming to an end for this session. I'd like to thank Jonathan, Leigh, and Balz for this exchange. I hope you enjoyed it. And back to you, Carol. Thank you very much.